Hi, this is John May with Greg Garrett Realty. Now, growing up in the 80s, one of my favorite movies was Caddy Shack. Now, while this is a classic comedy, there was a great lesson hidden in one of those scenes. Now, remember the eccentric millionaire named Al, played by Rodney Dangerfield? When he's on the golf course, he gets a call. It's, "Hello? What's my broker?" "What? Then buy, buy, buy." "Oh, everyone's buying? Then sell, sell, sell." What I learned from Al is don't follow the herd. They're generally wrong and late. Now, if everyone wants to buy, look around. It's probably the top of the market. Definitely, if everyone's heading for the exit, it's the bottom of the market. The same is true in real estate. When consumer confidence is down and doom and gloom is in the media, look around. Is it time to follow the crowd and buy gold, or zig when they zag and buy real estate? Now, here's a strategy for various situations. Now, if you're a first-time home buyer, now would be the time to jump in. The water's warm. It's an unprecedented time for you. Interest rates and home prices usually have an inverse relationship. When home prices are high, rates are low. Or when rates are high, home prices are low. But right now, it's the perfect time to get started on your first home because both rates and prices are low. First-time home buyers are recognizing this, and the numbers reflect that. There's an increase in demand for homes under $200,000, and sales are up in that price point. The thing you are racing against is the interest rate clock. While prices of homes may start to stabilize for the under $200,000 price point, a slight tick up in interest rates can cost you thousands in interest, or it'll lessen your buying power. Now, what if you're a move-up buyer? Your family's expanding, your job is stable, and you may have gotten that first promotion. Well, there's good news for you too. Your home under $200,000 is in demand, and home sales in the over $300,000 price point numbers are down from last year. So you get the best of both worlds. While home values are down from their peak, you get the added advantage of more than making up for the decline on the buy side. As an example, if the market value of your home used to be $200,000 and now it's only $180,000, that's a 10% decrease from the peak. Well, that's okay because the larger home that was $400,000 is now only going to be $360,000. The same 10% decline more than covers the market value adjustment when you sold. Again, your race is against the interest rate clock. Now, what about for real estate investors? Now, the investors I know are losing sleep at night hoping the economy does not recover until they have a chance to buy as much rental property as they can. As an investor myself, what I see is that with the rates low and prices low, the margins are such that cash flow will usually allow you to hire a property manager, freeing you up to spend time with your family or simply focus on more buying. I've also seen more sellers offering owner financing and low down payment loans on certain foreclosure homes. Buy and hold investors know that it is not how high you sell, but how low you buy that's going to help you fund your children's college or line that retirement nest egg. Now, where does that leave home sellers in the more expensive homes in this buyer's market? Well, don't feel bad. While it's been said that we are in a price war at a beauty contest, homes are still selling. Say you have a large two-story home on a large wooded lot. The kids are off doing their own thing, and you envision doing better things with your time than raking leaves and vacuuming bedrooms that nobody uses anymore. Well, here's a strategy for you. If you have the ability to rent your home and buy your one-level low-maintenance home, well, that would be a step in the right direction. Supply and demand of rental homes has driven up the rental rates, while the low interest rates let you maximize your buy side. Now, you're going to want to use a professional property manager to handle the details and sell when the market recovers. Now, this is not a direction for everyone, but it's certainly something you can consider. Another thought is to offer partial owner financing. Now, I've purchased several homes this way, and it's win-win. You get a higher rate of return on your money than what the banks are paying, and often can sell your home quicker and for more money than just offering conventional mortgage terms. Have the buyer pay off the balance in 5 years to get the bulk of your money in a lump sum when the lending guidelines come back to the center of the spectrum, and then they can refinance. Again, Not for everyone, but by surrounding yourself with a good attorney and a good real estate agent, this could be an option. Now, if both of those options make you queasy and it's going to keep you up at night, no problem. Check out my video series for home sellers. It reviews how to get the most money in the fastest time with no problems. Or better yet, you can join me for my free home sellers webinar. You can register at www.freehomesellerswebinar.com. If you like my videos, subscribe to my YouTube channel and they'll be sent to you as they're posted.